Diving into our inventory cycle, you'll see that this is quite similar looking to how we had the cash, revenue, and expenditure cycles. And let's remember our goals that we talked about in the last lesson as well as here. We want to differentiate between the different auditing assertions, the management assertions. We want to apply the correct auditing procedure to test each assertion, and then we want to understand the process and flowchart of each cycle. Now, all of these countless examples really do lend themselves positively to achieving these three goals. Countless sims, multiple choice questions will test your understanding of this, and you really need to understand how this all works, how the cycle works, and understanding if a particular test will satisfy a particular assertion. That's going to be pretty important. And with that being said, let's dive right in. We're going to deal with the account balance assertion and presentation and disclosure assertions because, well, the inventory is an asset. We're going to deal with that much more here. For completeness, we see and we remember that completeness is going to be much more tied in with tracing, whereas existence and occurrence have to do more with vouching. And we just think about that because why is that the case? If we trace test counts to a report, well, the report is the counting records. A test count would be a source document, so that's the process of tracing. Memorize that as well. And if we see that we counted 10 pieces of inventory, but the accounting records only show 9, well, guess what? We're helping to make sure that the listing is complete. You could also trace pre-numbered tags to physical inventory report sheets. For this, I would just think, hey, remember when you're leaving a clothing store, you've got those tags on the particular pieces of clothing. Just think of those tags. That's just how I like to think about it. Think about those on the pieces of inventory, and you're going to make sure that those pre-numbered tags, now they've got inventory piece number 1, number 2, 1000, 1001, 1002, tying those to the inventory report sheets. So you're taking the source and tying it to the accounting records. Next, for valuation, allocation, and accuracy, you're going to want to test the accuracy of inventory report and reconcile to the general ledger. This is going to make sure that understanding that the dollar amount of the inventory on there is tied to the dollar amount of the general ledger, making sure that the different accounting records tie. Because yes, you have the general ledger, which is the big kahuna. This is really just the core accounting record. But you want to make sure the subsidiary ledgers, these other reports, tie in well, because there will be different tiers within a company. You've got the manufacturing department, and then within that, you've got the factory. They've all got their various reports. You want to tie those in. Inquire about obsolete or damaged goods. This is going to tie in with the second point, scan records for slow-moving inventory. Both of these would indicate, and my classic example is, no matter when you're listening to this video, the iPhone 4 will be incredibly outdated. It is now, and it will continue to be. Now, let's just say the iPhone 4 was selling for $800 when it first came out. No, I don't really remember. I don't really care. But with that being said, right now, if a company was listing iPhone 4s in its warehouse for $800, that would be incorrect because those are not worth $800 now. No one's paying $800 for an iPhone 4. So we would have to write down that inventory because that does not properly reflect the value of it. Lastly, here we can examine vendor invoices, review labor rates, recompute overhead rates, and review variance analyses. Think back to our business exam. If you've taken BEC, depending on when you're taking this exam, could have a change in the format of the exam. But the business exam, generally cost accounting, think back to that. Well, we've got inventory, and a lot of costs, including labor and certain overhead costs, are going to be capitalized and put toward the value of the inventory. As such, that's going to go on your balance sheet, making sure that you understand what costs get capitalized, added to the value of the inventory, and then with that, recomputing for valuation, allocation, and accuracy. That would be more allocation, right? Allocating, making sure the proper costs are assigned to where they should be. Next up, existence and occurrence. Here you could just simply observe the inventory count, verify that the items actually exist in the warehouse or the factory. Those are obviously going to help you make sure that whatever this is exists. And then in this case, vouching, because you want to make sure that whatever is listed on the accounting reports actually exists in real life. So you're going to vouch the inventory report sheet to pre-numbered inventory tags. Next, for rights and obligations, well, you just want to make sure that think of the consigned goods concept, think about FOB shipping point, FOB destination, all of those. You want to make sure that any inventory that should be included is included. You have the rights to it. You have the legal title to it. If it's FOB destination, title doesn't transfer until it's at its destination. Keeping that in mind, what inventory should be included, obligation, and that could also have to do with cutoff, but kind of bringing that in there as well. Consigned inventory, does that inventory actually belong to you or is that someone else's? Thinking about that. Did you pledge your inventory as collateral? Thinking about those concerns. Now, presentation and disclosure for completeness, you want to make sure that any disclosures are included. Are they, are the disclosures completely included? You have to disclose the inventory method you use, anything like that. Read the footnotes, making sure that anything mentioned in the footnotes and the notes to financial statements are properly stated in terms of valuation, allocation, and accuracy. For existence and occurrence, you want to compare to audit evidence to determine occurrence, just looking at all of everything you did. Really, this is like a soft version. Like this is the hardcore, like the account balance, making sure that the numbers are correct, making sure that everything exists. These are kind of just, like I said, they're soft checks to make sure that everything here is properly presented and disclosed and easy to understand. Rights and obligations, inquire of management and read loan agreements and board meeting minutes, and inquire about warranty obligations. Think warranty, you got a warranty on a TV, you sell TVs, and there's a 30-day warranty where the customer can come back and return it. That has implications in terms of, can you recognize that sale yet, or can you recognize that as inventory out the door? I'm not going to get into the rules there because we don't really need to know, but just inquiring about that, thinking about that concept. Lastly, to make sure that the financial statements regarding inventory are able to properly be understood and they are properly classified, you want to read the required disclosures, the common phenomenon we see here, just read, and then review inventory records for proper classifications of all of those good cost accounting concepts, making sure that these are properly classified because, as I mentioned, these will feed into the value of inventory. We are having a good time. We're powering along. This is going to be a long lesson, but it's going to be quite impactful and beneficial for you. You really want to hone in and just going to reiterate this again over and over, right? What are our goals? We want to understand the differences between the assertions because that is something I've seen time and time again. Candidates be confused on, and I was confused with that myself. Applying the correct auditing procedures to test the assertion, making sure you're not saying, "Oh, we're going to do tracing for existence and occurrence," right? We want to make sure we have that down. That's going to earn you so many points. And then understanding the process and flowchart of each cycle. That's something we'll see the physical flowcharts, but seeing how understanding where these points tie into the process. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.